Awesome. Thanks for joining us, Christo. Today we're going to be talking about 13-week cash flow or a cash flow forecast, right? So many customers come to us initially with a pain point of saying, I want to know what my cash is going to be doing. How do we plan for the next 3 months, 6 months, 12 months? And I don't know where my cash is going. And that problem is probably one of the main pain points that customers reach us, or why they land up at our doorstep. But as you obviously explained, and as we know, it's actually a multifaceted problem, right? Especially for inventory-based businesses.
Yes.
And how that inventory cycle affects that cash flow forecast and that working capital, and how is that presented in a inventory-based business.
Yeah.
So what I want to ask you about is, I'm sitting at this side, we're saying, okay, I want a cash flow. I'm an inventory-based business. I want to know what my cash flow is doing in the next 3 months. Where do I start?
Yeah, that's a good question. I suppose where we start with everything, right? It's understanding first who does what, right, in the business. And I think that's just a solid foundation. So we want to understand who is doing your purchasing, how it's done, when it's done, and where it's actually done, in which system. So I think, that's the reality for everything, from our sales to our, even accounting, or processing, bank reconciliations. We want to know everything about who does what, when, and how they do it, where they do it. For us to be able to understand, that, we run a process called the people process and technology process, which we run through our businesses, or clients' businesses with them, and to ensure that we know and they know who's responsible for what, and how things will work. So we do a bit of a gap analysis to say what's also the future state of what we want. But I think that's like the foundation for all of this, right?
Well, it's interesting. I mean, you mentioned a couple of streams. Quickly, you touched on a few, but what I took away quickly is, one is sales. Who's in sales? What does sales do? How does sales land up? Who's doing fulfillment? You spoke about who's doing purchasing, right? So there's an entire purchasing channel that we have to think about, and how purchasing is decided upon, who makes those decisions, where are they doing their purchasing from, where are they documenting where the decisions are made. You spoke about accounting. In the accounting function, there's bank reconciliations, there is accounts receivable management, there is accounts payable management. Who inputs that information, or how does information land up into your general ledger? And we'll touch a bit more on other finance functions that is affected, like budgeting. But what you just quickly mentioned as a people process technology exercise that we run through, it's actually there is so many different streams that you have to think about, and make decisions on, because that affects the information that will ultimately land up in your cash flow forecast.
Exactly. I think we've mapped more than 150 different processes, that we want to understand who does what in an inventory business, and that that becomes more the more sales channels you have, if you include manufacturing as well. So I mean, it is quite the process, but especially for forecasting cash flow, it basically hinges on three main components. The first is our sales, right? To understand what are we seeing coming down the line. How is our sales coming in through the different sales channels, and how does that cash basically come in? The second part is purchasing. How do we then react and make sure that we've got enough stock to be able to sell that? That's obviously one of the main things. Like, you can have the best sales demand or demand planning, but if you don't have stock to service that, it's going to be impossible. And then budgeting for your operational expenses and other income to see how the cash, comes in through those aspects. And each of those are the cornerstones of what we see is a 13-week cash flow, right? But once again, if any of those three pillars, if the data isn't clean, it's not inputted in a timeliest manner, or actually just not, if it's not being done, which we also found a lot of our companies that we engage with, there are gaps. Who does this? Nobody does this. Who plans for the next few months of your stock coming in, or who maps it? It's actually not there.
It's interesting that you mention it, right? And I want to stop there and say, even from a sales side, what I just thought about is having a conversation with a customer, very recently, where the sales side is they're engaging with potential customers, new customers, new sign-ons, new wholesale or distribution channels that might be coming online, right? But if that information is not relayed into a system, I mean, you're not able to do that inventory allocation to kind of say, where's the availability going? And the key problem that we consistently see if we don't have a proper people process technology exercise is the information that exists in people's emails and in their heads is not existing on a system to be able to do the scenario planning and the scenario forecasts, right? Then it's just last year's sales plus 5%.
Yeah, and that can be dangerous. In some cases, it works, and that's one of the assumptions we would use. But you need to have that on the ground knowledge, and that actually needs to be in the system. If you think about what a 13-week cash flow is, it's 3 months, right? So, a business owner or a business manager should have a bit of an idea what's going to come in the next three months from a sales perspective. But also, if you look at your purchase planning, 3 months is not a very long horizon. So both of those really should be in there. You should have that in your system, at least to be able to forecast the demand, but also, you should have a very good idea of what you're planning to buy in terms of stock. Obviously, if you're manufacturing, that horizon is even, I think, longer. That you should have an at least intuitive idea of what's going to happen. So, but if it's not in the system, it's not going to do anything for us. It's not going to drive any decision making or help to get to a point where we can look at our 13-week cash flow.
So that's really interesting. So what I just took away from that is you need to really understand, one, what is your sales channels and what is coming up in your sales channels. And on the other side is, every business has got their own inventory turnover period, whether it's manufacturing in-house or you're doing contract manufacturing or you're just importing, right? But there's lead times involved, and so like I have to place orders at certain points in time. It takes X amount of shipping days for that inventory to arrive at my warehouse. And those type of things need to be taken into account, which makes a 13-week cash flow unique to every business, right?
Exactly. Yeah, you're right, because if you look at even the importing example, you've got a deposit that you need to pay today, especially if you're importing from, let's say, China. They won't start unless you've got a very good relationship. They won't start producing until you pay the deposit to start the production. Then that's immediately a cash outflow, and then obviously when you receive the goods or when it's finished produced, you have to pay the balance. You have to pay shipping. You have to pay any duties that comes with that. So all of that, it needs to be planned for.
Right. So that's even supply dependent. I mean, if you think about what you just said, like your agreement with your suppliers might be X works, like when they finish producing.
Yeah.
Others are on shipment, like export, like when it leaves the port. And others are when is invoiced when shipping lands at your warehouse. And in between there's customs and duties that you have to take, or tariffs that you have to take into account. So again, it's not just business specific, but it's also supplier specific, and you need to take that into account and document that in your relevant system that you use.
Exactly. So what you're thinking is, it's what are your terms? What are your lead times? What are your minimum order quantities? Because sometimes, we'd like to order one of it because it's what we need, but they only allow us to order a minimum of 10. So if you think about all those components, those are the things that should be in your system, right? You should have your lead time, you should have your minimum order quantities, and you should have your supplier terms. And that really drives a lot of your cash flow. Obviously, from the sales side, also you need to know what your customer terms are, what you're expecting to sell, and then how that cash flow comes in. How long it even takes you to fulfill. If you have a long fulfillment lead time, if it takes a lot of time to process, if you do demand manufacturing or just-in-time manufacturing, made to order, all of those components need to be captured in your system to really have the data to understand your cash flow and to make it usable. That's so you can actually make decisions.
100%. And also, if you lose, I'm thinking one of the retail customers that we work with, right, is they forecast demand, sales forecasting demand based on seasonality, right? They're bringing in they're importing certain goods for certain seasons, winter, summer. Then they've got like evergreen items that doesn't really matter around the season when they're importing, but their sales in those items are seasonal.
Yeah.
So, they need to make a very bespoke demand forecast to kind of see where they think these sales will land up, or what they want to be putting into the market, what they think will be selling. A lot of assumptions in that, because you never know until you see what comes out. But that's again, like, you have to start somewhere, right?
So I think what you're saying there is the crux of it. A lot of these type of actions are happening. It's just not documented in your inventory management system, and that makes it very difficult to pull the data from one source or two sources that are not disparate, that actually speak to each other, to be able to start working on these kind of cash flows. And I think that's a really good point, because every supply chain manager or purchasing manager would know more or less what's going to happen in the next 3 months. Every production manager would have some kind of production calendar.
Well, if they're worth their salt, right?
If they're worth their salt. And a sales head or a sales manager, same thing. Have at least an idea of this. So we just find that it's not in the system most of the time.
Because, they are being managed, from a CEO point of view. The CEO would give them targets, things that they've committed to. They've planned out how they think the next 3 to 6 months will look like. If it's a founder-led business, even for themselves, they've thought about what is coming next. And it's about getting that information into your inventory management system, so that you are able to say, what is the cash effect of the decisions that I'm making on sales or winter wear or whatever we're planning to do in the next season. But that make sure that information is in your inventory management system.
And the details there. So it's not just an idea, but you actually want to have the detail of which products are you going to sell. Not just, I'm going to sell X amount of dollars for the next 3 months. It is what product, because that informs your purchasing on the other side. So I think that's also important. So if you think about per product, having a specific lead time on a product also, not just on your supplier lead times, that's also something that you can capture in your system. So that's why it's good to have that. This is the product I will sell, or this is how many I will sell in the next few months, and this is exactly the detail around how I will get that product. Or if I have it in stock, no problem. I will not need to. I don't have to buy it. Or if it's already on purchase or on order, I know I don't need to order more. So yeah, I think it's about having that in the system, having a clear view of the detail in there, not just a spreadsheet. And that's why a budget is not good enough, right? So a lot of budgets will have this is our budgeted income, but it's a line item.
Yeah, it has to be broken down into a product level. That's the key, right? Is to say that my sales demand it's not a sales forecast. You're saying, okay, what is the sales forecast broken down into units? That's really what a sales demand is.
That's it. Yes, okay. That's what we want.
I just want to make an interesting point here that is why finance teams are so well positioned, and I always say this, is because they are linked to every business silo, right? They deal with the marketing team, they deal with the sales team, they deal with the ops team or the supply chain management team, and the research and development team of what products are coming on. If it's a retail business, the designers, what are they looking, what products are they developing, what are they looking to bring in for the next year. So why they're so well positioned is they speak to all these individuals. They just need to make sure that information is extracted and that it's living in the inventory management systems. They kind of need to drive the process to be able to get to a 13-week cash flow, because a lot of times we can't cash flow forecast, but it's about getting the other teams to just give us the information that exists outside of the system to bring it into the system and enabling them to use it and assigning accountability for it. And that's why the PPT becomes so
important. Because then that's a book or handbook to know who does what and where to get it and how to get it in the system. So even if it's not initially put in the system, it's like, okay, at least this person is doing it. How can we get it to a state where it's being put in the system? But you're so right. Like the financial team members are exceptionally well positioned to get all that information. The reality is they get the information, they always just get it too late because they'll see the end result of the transaction. So what we're trying to do is we want to try and put them where they see the planning stage of it also, and the detail of that planning.
So interesting you mentioned planning. Is we've spoken about now what sales demand is, and that it has to be broken into a product level of what you think will happen so that you know what kind of your demand will be. We spoke about lead times, minimum order quantities and these things, and safety stock. If you want to have a safety stock, because plans are plans. Exactly. We know it's that the reality will be different, but the process of planning gives you the information to make decisions, which is the important part of planning. Talk to me a bit about now, how do we take the sales demand that we've broken into a per product level? Now we need to talk about resource planning, or what do you call MRP, material resource planning, right?
Yes. So exactly. So now we've got our sales demand. On the other side, we know what our stock on hand is. We know if we put in our safety stock, our lead times per product, minimum order quantities. Sometimes they also have minimum, like incremental ordering. So we know we need to order 10 at a time. If we know that, and I mean, at the later stage, we will obviously want to know the supplier terms because that influences our cash flow. But on the MRP side, those components are very important to know when we need to order what. And I think, that is a crucial part of it. If you know what's coming down the line, then you can start doing that. But then it's actually basic math. It's not as complex on a one-per-one basis for you to calculate yourself. You can work it out. Obviously, the issue comes in if you have 500 products, right? Then it's not so easy to work it out anymore and keep track of all of that, especially if there are some nuances in, a supplier would have a lead time typically of 30 days, but for this specific product, it's 40 days. So that detail is super important to get our MRP right, our purchase planning. And when we look at how a 13-week cash flow model would be put together, the more we put into the system, the less it has to calculate or make assumptions on. So let's say, for instance, we've got a demand planning and we know a client is going to put a big order in. Instead of using an assumption on a demand plan, let's put that order in, even if it's in a draft state. But then it's there, right? Then we can go backwards and say, what do we need to order for that? And we can, once again, even if it's in a draft state, put that order into the system. And that gives us control suddenly. Where if it's the other way around, we're saying, well, we say this customer will, based on previous history, order 100 units. We know actually they want to order 200 units. But now, because it's not in the system, now we're planning to buy only for enough to service 100 units. And that's just going to be a calculation, right? It's going to tell us to do that. At the moment we've got that other side in, we can say, okay, well, we actually need to order 200 units. And we take control of when that's going to land, how we're going to order it, instead of relying on a model to calculate it for us.
It's interesting. I mean, one of the key things I see there is if you've started adding in purchase orders and things, people put optimistic dates of when they think stock will land, which throws my cash flows out. And there's a bit of change management with the purchasing team to be like, what you communicate to the supplier is what you put on your purchase order that you send to them. But in your stock system, you need to be really realistic about when you think things will land and when you need to order them.
And keep it updated. That's also a big part, yeah. Your suppliers like to delay. Well, I mean, things happen. So sometimes you just know that you're not gonna be able to receive that stock in this week. So you'll receive it next week. But that means if you've got a net 30 terms with your supplier, that's going to shift out your cash outflows.
Right, 100%. And so because it's a 13-week cash flow, that needs to be updated weekly. So the information that comes out of your emails in communication with your supplier, you should be updating your stock system on a weekly basis on purchases that's pending.
Yeah.
And what you think will be going, draft purchases, right? Things that you think you should be doing based on draft sales orders that you're going to be receiving from customers, so that your 13-week cash flow becomes realistic of what the no knowledge that you currently have within your entity is put down into your inventory management system.
So what you're talking about there is a bit of hygiene, right? Yeah. That's why we developed the systems usage reports.
Yeah, 100%.
It's exactly for that reason, to say how many pending orders do we have? Are they still valid? Are they past their required by date or due dates or expected receiving dates? Like, if we have so many of those orders or too many of them that are not being updated, then obviously that's going to influence our cash flow forecasting. So we need to keep that updated. We need to make sure that they're still valid. Are we actually going to receive the stock from the supplier? Or is it just an open purchase order that's telling us that we will receive stock that we will never receive, and therefore creating a situation where we're not even planning to purchase more stock? The other way, inverse is also true. If you think about sales orders that are unfulfilled or orders that are cancelled, that you haven't actually cancelled in your system, it will allocate stock. And then you could lose out because you're purchasing extra for that order and upcoming orders. So that hygiene of doing it and being diligent with it, weekly, daily, I mean, we're not talking about monthly horizons here for those kind of things. It's operational. Operations day to day. So at least once a week to have your cash flow forecast up to date. But if you really think about it, it has to be daily. Or as you get the information, at least.
As you get the information updated, right?
Yeah.
100%.
Yeah.
So then it moves. If I think about a cash flow forecast and the things that we've discussed, we talk about sales. So we've got our sales demand line item. We said we know what our terms are with those customers, so now we know when cash will fall on those sales. We've spoken about purchasing, planning our purchases out based on stock availability and when we think we need to purchase which items. So now we've got our purchase orders and we've got our supplier terms, so we know when we'll be paying those suppliers, right? The next line item is the operating expenses of the business, right? Because that's the third leg that comes into a 13-week cash flow is the operating expenses.
Yeah.
That's not necessarily existing in an inventory management system.
Correct. So yeah, super important because that drives your OPEX for sure. Yeah, so we've got two ways that we think about it. We can kind of work out an average for your OPEX, based on previous data, or we can use your budget, which we tend to like more. The main thing with that is, though, you need to say which day you would typically pay that expense, because otherwise, otherwise everything will just fall on the month end.
Right, so
which
100%.
is not true.
So you need to break out your operating expenses. One, we say what reflects reality the most. CEOs will push you to use budget because they like to look at sales figures on a budget side and operating expenses on a budget. And then you've got historical average, but there could be changes from that. So this is nuanced to, again, every business is unique. Make the decision of what reflects reality the most, and then break it down on a per day. Like, when is that payment physically going off? Yeah. I'm thinking about subscriptions, right?
No,
they could be
random.
going off like in the 12th, the 19th, the 25th. They hit the credit card or your bank account on different dates.
Yeah, and sometimes you've got weekly wages or fortnightly wages. That makes a big impact on your cash flow, especially in manufacturing environments. So you need to specify when those expenses are going off, so that you can. I mean, otherwise we could have done a monthly cash flow, but that's not going to help us. We need to know per week what's happening. So the budget, or making sure that you spend time. Once again, the detail comes in here, but spend time on your operational expenses in your model is very important.
Like it's actually on a per line item basis, and every line item has a different date that it will probably be paid. Usually that will be consistent for OPEX, usually, unless there's unexpected items. But again, it's not. I find operating expenses rarely veer to the unexpected, right? And if there's something that unexpected happens, it's not necessarily a cash flow that will hit in the next 30 days. If something happens, if there's a lawyer bill or something that you haven't thought about or you didn't know that was coming in, there's probably terms attached, and you can adjust your forecast appropriately, but it's not necessarily something that hits and you have to pay by next month.
Can I quickly chat about the realities of business?
Yes. Yeah.
I mean, it happens both sides, but sometimes a business doesn't have cash, right? So I think it's also another thing that's very important is where you manage when you're going to pay what, or if you're going to have a conversation, and I'm talking about creditors here or AP, which you can't pay, it should have fallen on that day based on your supplier terms, but in actual fact, you can't afford to pay it. So managing that expected payment date is also very important. Obviously, our cash flow forecast should inform that, to say, well, I won't be able to pay that. Let me phone my supplier and say, listen, this is not going to happen. I'm going to pay it in 2 weeks' time. and the inverse also.
Mm.
Phoning your debtors or your accounts receivable, following up, and asking them for realistic payment dates, and actually inputting it into the system. Because otherwise, you're just going to have past due debtors that's showing up on, well, I'll obviously have to receive it this week, the first week of my cash flow forecast, which is not the reality in many cases. So a bit of housekeeping in that sense also, and that happens. A lot of this happens, once again, on emails or phone conversations, not actually in a system. And it's also that having that discipline to put it into the system, once again, you can actually manage your cash.
100%. And now that links back the way that you mentioned it, is your cash flow, your 13-week cash flow forecast, one becomes a living document.
Yeah.
Because, it's based off resource planning, sales demand, and what we spoke about, operating expenses. But on the other side, it becomes a management tool. So now we're saying, okay, but hang on a second, I'm going below my safety bank balance, or below zero. And if we don't manage this, now I need to phone that data. Now I put an expected date, it moves to week 3 instead of week 1. So it becomes this living thing, right? Where, again, realistic expectations of what is happening in the business is inputted into your system. So it's not just a living document, it becomes a management tool.
That's exactly it. That's exactly it. It should really become the foundation of how you manage your business, right? Because that's cash is in most cases extremely important for businesses. In 99% of the cases. Some businesses, I suppose, are flush with cash, but yeah, most businesses that come to us in any way have that problem. They need to manage their cash properly.
Well, I always say growth sucks cash, right?
Yeah.
So it's not necessarily that it's a business that's struggling with cash. High growth businesses also have this cash, also have to manage cash flow really meticulously, because growth sucks cash. And your working capital movements within the business, usually for inventory-based businesses, is negative, right? Because you have to be ordering stock, you have to be paying deposits, and you have to be getting things in before you can sell them. So you've got a negative cash flow cycle. And growth, that's why I always say growth sucks cash. And it's usually more apparent in growing businesses than it is in startups, right? So high growth businesses have got a bigger need to be focusing on their cash flow forecast meticulously, to be able to inform decisions on which supplier am I, which relationships are we leaning on a bit, which suppliers are we pushing on, how are we engaging with our sales, like our customers, like how are we bringing those things in.
You're 100% right, and I'm glad you also mentioned the relationship here, because if you're good at managing your relationships with your suppliers and your customers, you can make it work. In many cases, suppliers would be, I wouldn't say open to better terms, but if you tell them the reality of your business, because you can see what's going to happen, but you give them a bit of a heads up, usually they're okay. They don't like phoning you and hearing that you haven't paid them, it was due last week and you're planning to pay them in 3 weeks' time. They don't like hearing that. But if you communicate it proactively, because you know what's happening, then it's going to be better for your supplier relations. And I suppose the other way around also, if your customers do it to you, you'd probably be a bit more happy with them.
It takes the unknowns to knowns.
Exactly.
That's the main thing. And then the knowns becomes the data that you're driving your decision making off, right? And again, the knowns need to be in the system so that you can be driving your decision making off of those things.
So one final thing we haven't touched yet is, let's say, irregular income or planned income, which might be irregular from whichever event, or expenses, right? Could be capital expenses or just big expenses coming up. And also just keeping track of that and putting that into your model. That's quite important. And that could also help you to see, yes, can I do this?
Mm.
If you just put it in there, see, okay, what's going to happen with my cash if I do X, Y, and Z. A bit of scenario planning. I know it's only 13 weeks, but for a growing business, 13 weeks can be a long time. So yeah, also just important to note that if you know something is coming down, it's not part of your normal OPEX. It's not inventory based, so you wouldn't have an inventory purchase order in there. I mean, you could just make sure that you keep track of that also.
Capital expenses and financing, right?
Yeah.
So the other side of this is if you're using working capital financing, or you've got a finance partner, or you want to bring on a finance partner, you kind of know, and then you can plan out where you're doing your drawdowns, when that cash will land in your 13-week cash flow forecast.
Yeah, for sure. I think that's it.
That's not it. It never is. It's a living document. I just said
yes. I think that's all the components.
that's what it is for today.
Yeah,
and then it will change tomorrow, right?
Yes,
and that's the point.
That is the point. Yeah, it becomes a day-to-day operational and management tool, and I think that's what we want from as a company, right? We want to enable business owners to manage their businesses. To
make informed decisions, right?
Make informed decisions. We really want to partner, and that's why we kind of spend a lot of time on this. That's why we build all these tools that we have, and why we put in the effort is not just give not just give reporting that's looking backwards, but really try and enable business owners to make better decisions and run their businesses more effectively.
Yeah, so in summary, if we think about the pain point that we started with, so what's happening to my cash, and I want to be able to, plan and see what's going on and do a 13-week. The point is, it's not someone sitting somewhere alone on a spreadsheet that's building out a cash flow forecast.
Yeah.
It's a full team, multifaceted approach, and everyone needs to be involved at certain points in time to be able to get a cash flow forecast.
Yeah, that's right. Yeah, it's a combined effort.
Awesome. Thanks, Christo. Thanks for joining me today.
Good. Thank you, Jaco.
And I'm looking forward to all those cash flow forecasts that we're going to be rolling out.
Me too.